Okay, folks, welcome back. Weekly review, week ending March 15th, 2019. Okay, so we'll be looking at the economic calendar, general commentary, US dollar index, fiber, cable, and we'll be talking about the Artemis setup. Okay, let's take a look at the economic calendar. Ahead for this week, Monday we have a clean slate. There's really nothing to speak of as it pertains to Eurodollar, GBP, or dollar index. On Tuesday, we have average earnings index for GBP at 5:30 a.m. during London Open, just beyond London Open. And unemployment rate, medium impact GBP, sensitive. Then 6 a.m., we have economic sentiment number, medium impact euro, and the Parliament Brexit vote is the highlight for Tuesday, tentative. We'll see what that does. And Wednesday, we have CPI, high impact, again, 5:30 a.m., GBP. And then GBP, medium impact, PPI, and RPI, again, 5:30 a.m. And before I go any further, just notice that there is a 5:30 a.m. repeating theme here. Now, this is in terms of my local time. So I'm in the state of Maryland in the United States on the East Coast. So we're in the same time zone as New York. So we're under daylight savings times right now. So we spring ahead 1 hour. So if we don't do that spring ahead stuff, okay, this would still be what time for these reports? 4:30 a.m. Okay, you see why I just disregard the whole daylight savings time. I add an additional hour to the back end of all my kill zones to elongate them, but I always keep the time window, if you will, the same for the start. And I don't worry about, I use the furthest to the left for the kill zone, in other words. So right now, it adds confusion. And it's always had a sense of confusion for me because of time, not for me personally, but as an educator talking to folks all around the world, different time zones, I always tried to duck and weave when it came to that question because I know that it's confusing, and it also is further confused by the broker that you may be using. It may be on a totally different time window, or in other words, their time profile for quoting the time of their price. It's all the same, obviously, but the way they classify their time or what time zone they're in may be a point of confusion. I bring this up simply because this is just highlighting the fact of why I don't want to respect daylight savings time spring ahead stuff. Okay. All right. So keeping with the Wednesday, we have 2 p.m. late in the afternoon, New York time, as you would expect. We have FOMC, economic projections and statement, and federal funds rate. And at 2:30, we have the press conference. So Wednesday will be a heavy hitter late in the day. New York open or session for Wednesday will probably be pretty much untradeable. Everything will be waiting for the FOMC. And then Thursday, again, 5:30 a.m. GBP, retail sales, medium impact public sector net borrowing, and then economic summit for EU. And at 8 o'clock a.m., GBP has a official bank rate vote and monetary policy summary. And then we have asset purchase facility and 8:30 a.m., medium impact Philly Fed manufacturing index. Friday, we have high impact French flash service, PMI. And then 4:30 a.m. is German flash manufacturing PMI. 5 a.m., medium impact flash manufacturing PMI, flash service PMI. And 8:30 a.m. New York. I included CAD this week. This is the only mention of anything noteworthy for its country, and it's the CPI and core retail sales, high impact on 8:30 a.m. on Friday. So that's probably something we can find a trade on. I'm going to be looking for a setup Friday personally myself. If I can get something I can record and share by way of Twitter, I will. All right, moving on over to the dollar index. This is a daily chart. You can see the buy side liquidity noted here. The noteworthy sell side liquidity is also shown around that 94.55, 94.60 level. There's a fair value gap noted here. It's very, very thin. It's not as big as it may be illustrated here by the height of the letters. Don't be confused by that. I'm focusing on the high here and the low here. So it's a very, very small fair value gap. So we can come down, run these stops, get some buying off the order block here, and maybe trade back up into this swing low, and that may be a further decline, or you could just slice right on through. Right now, I'm bearish still on dollar relative to last week's price action. There is a strong seasonal tendency underway, so I'm going to give it some room to see if it wants to blossom. If we take this low out and close the gap, the mean threshold here, while it does have something of interest right on the middle of that candle with these two candles as a missing portion of the body, just wicks are supporting that. That may be a sensitive price point as well. We could see something at that moment, trade back up, maybe hit the lows here. It could be another scenario that may set up a short opportunity to study. And then obviously the sell side liquidity here. It can still remain in a large trading range and not do any of these things and stay in the range between the low here and the high here, and still cable can rally based on the Brexit vote this week. Okay, so in terms of how much we've seen movement for the dollar index relative to the GBP last week, it's not really showing a relationship that would be on par with what I would expect, rather. So I would have expected to see the dollar index really have come down further than it did. So we can't completely rule out the likelihood of it wanting to go higher this week, and what would set the stage for that. If we gapped up, traded down, found some support, filling the gap, and then rallied up through this little area right in here. So there's no real bodies in there. It's just the open on this candle and the close of this candle. And yes, there's a wick through there, but to me, I find that indicative of an area that may want to be revisited. So it may be in an area where inside that range, and I'll leave this for your study, you go down to a lower time frame, you may see a bearish order block in there that may be recapitalized. So reclaimed order blocks really materialize in areas like this on higher time frame charts, like a daily 4 hour or something like that. So again, if we trade back through here, that would be the only thing that changes gears for me to attack the buy side liquidity. Right now, we are focused on plan A, which is bearish dollar. Okay. Moving on over to the hourly chart for the dollar index. Take a look at this chart, okay, and pause this video and study it for a moment. And when you've come to a conclusion, either you see something or you don't see something, then unpause it. I still know some of you aren't pausing. All right, so taking a look at the price action here, we have a consolidation here. Then we have the smart money reversal, low risk short, redistribution, and that puts us on watch for this low to be taken out. So we have a market maker sell model underway. So I would like to see it show a willingness to want to get down below here and then accelerate. Okay, in other words, catch up with what has been posted on the bullish GBP. So there's been a lot of lift on cable, and in this area, we'd like to see it really make an aggressive run. Now, this is it's over several days. This price action is relatively balanced. So we could see it come down here, trade into it shallow, and then maybe want an attempt to rally there. So be mindful of that. So if you're going to sell short right on off of this level in here, or close to it, just be mindful. Don't give it a lot of room to go against you on the upside. And keep your demo stops relatively tight. Moving on into a 15-minute time frame. You can see we had a gap in here, closed the gap, rallied up, filling it, distribution. Another level of distribution in here. Breaker We've hit that multiple times here on Thursday. Came right back up. I don't have that line extended out there, but it just fell short of it anyway. And a nice little run above equal highs. Beautiful market protraction, Judas swing, and lower. So we'll be looking to see it trade below this low going into next week. It may even gap down there, which would be incredible. That'd be nice because then we can see it trade back up, fill the gap, and look for a continuation on the downside for the dollar. Moving on to euro dollar. This is our daily chart. We have this level here is just going to denote the sell side imbalance, buy side inefficiency. So in other words, we had this level in here and this level in here, okay, mapped out as a potential SIBI, sell side imbalance, buy side inefficiency. So this area in here is a fair value gap. So price hit that initially, but we have left that in the marketplace. So it has only had sell side delivery, no buy side delivery has been offered inside that shaded area here. If we trade through that, we will be attacking the buy side liquidity above this high. This low, I like the idea that we traded through it and then we came all the way back through this imbalance and now we're above it. We found some support at it, okay? And you'll see what I mean by that when we go into a lower time frame. But this area here, it just looks like it wants to press higher. But this is going to be the area where I'm going to be watching intently this week. So if we trade into that and we start to sell off, that may require us to come back deeper into this range a little bit. Now, I'm not saying it's a complete rollover. I don't see that. I'm just saying that this may require, once it trades here, a deeper retracement, which sets up a short intermediate term long position on euro dollar, in keeping with what we mentioned last week as a potential reversal from a quarterly analysis standpoint and with the seasonal tendencies relative to the euro, the GBP, and dollar index. Moving over to the hourly chart. All right, so we had, I mentioned last week on Twitter, I shared a little video. You had equal highs in here, and there's another equal highs that you can go watch that video too. And they were targeting it. These blue lines in here, again, focus just on the top one because that's the daily upper end of the SIBI, sell side imbalance, buy side inefficiency, or gap. Just think of it like that. Once we trade above it, an old gap, that gap many times will act as support. We can see that happening here. Trades down into a bullish order block. Beautiful, rallies away. I shared my position being long on the euro dollar this particular day. I just knew that if I kept it open, it would draw more attention. So I just closed the trade because I want to throw everybody off on public. And you can see how this was a really nice setup. I wasn't awake during this time. I was needing sleep anyway. But you can see the London setup. Beautiful Judas swing down into a bullish order block. Running sell side liquidity, the stops below here, targeting equal highs right here. And beautiful delivery on the upside. And we had a little gap in here as well. That was an opportunity for the New York session. And price extends into it above the equal highs. Beautiful, beautiful delivery of price on a Wednesday. Okay, on a Wednesday using institutional order flow, using the institutional order flow entry drills that I gave you last week. Beautiful opportunity to use that here, incorporating a bullish order block as well. Moving on into a 15-minute time frame. You can see a lot more detail in here. We have equal lows in here that we run through on a Judas swing. So we have a low, equal lows. So a small little liquidity pool resting in here with a hourly bullish order block, which we showed on the chart prior to transitioning to the 15-minute time frame. And price rallies up and gives us multiple opportunities in here. Nice little gap again, trading into a inefficient gap up, run down, fill it, and expand to the upside, clearing equal highs. Okay, so really, really nice bread and butter setup for euro dollar. We'll be looking to see if it wants to press on in to the shaded area as I indicated on the daily chart, and we'll see what we do once we get there, because this is going to be a decision point for me whether we want to go higher or lower. If we trade up there and then really give up the ghost and break down, it might be just a consolidation week relative to the economic calendar, because there's a lot of heavy hitters in terms of FOMC next week. All right, GBP, this is the daily chart. All right, so we have a bullish order block mapped out here. Traded down below a swing low, ran out the sell side liquidity. Big run up here, right on the heels of our analysis last week before markets even opened up. We gave the insights about how the seasonals are coming into effect, and we got to be prepared for that. And the opening gap on Sunday was all that was explained last Wednesday. So go watch that video if you didn't watch it, because there's going to be a lot of details in this review pertaining to that I'm leaving out because I've already talked about it. So it looks like it wants to take another run higher. If you look at the high here, this was the framework for another deeper run on liquidity. This level will be salient when we drop down into an hourly and 15-minute time frame. But it just looks like we've rallied up, dropped lower, filled it all in, rallied again, and now we're pausing right before another expansion on the upside. So 135s, 136s could still be in the cards this week for GBP. What changes that? If we trade through the mean threshold of this down close candle right here, okay? So that would be essentially 131.30, we'll call it, 131.50 in that area. So if we break down below that, that would remove my bullish stance for GBP for next week. But I'm bullish GBP. All right, looking at the hourly chart. Okay, so I gave you an example last week with the Eurodollar teaching on a video where I used a setup called Artemis. Now, Artemis is my way of communicating to you and staying within the scope of my limitations, that how the algorithm will use a dealing range and how you can use the fib to get in. It will look like to everyone on the internet and everyone on Forex, Twitter, or whatever you want to call it, the community that uses Twitter for trading, they will see this as chasing price. Okay, and I want you to study this, because once you see it and you start looking for it in other markets and other pairs and other asset classes, you'll see right away it's not chasing. Okay, if we see a range, okay, here's the dealing range, here's the high and here's the low. Wait a minute, what's over here? What's the low? The low is over here. Okay, so we have a low, we come back up, can't get through it, a lot of price action around that. The wicks, if you look at the wicks, divide that in half, it gives you that level as well. It's also a closed candle, bearish order block, a lot of confluence there. Extend that out in time. You see there's some sensitivity here, all around this price level as well. So what you want to do is you want to measure your fib from the low end of the trading range up to the high end of the trading range. Once the trading range, again, is over here, once they blow through it on the downside and we're bullish, if it takes that out and starts to rally up, what we're waiting for is a kill zone to continue on the upside, but also looking for an entry relative to a discount to the dealing range. And what I mean by that is the high to low, we have to be below the 50% level, and it has to be a kill zone. It has to be a time of day where it will promote the likelihood of buying. And ideally, we're going to see a down close candle form at that specific time. That's here. Okay, so notice there's no deep retracement. It's just rallying up, one single candle down right to the sweet spot. That's Artemis. You saw me do it on the Eurodollar on Friday for a small little intraday scalp. But I was teaching that it's fractal because I'm showing you here on an hourly chart. If you do this, you don't have to get the very, very low. You don't have to trade at the order block. You will trade as an order block forms. Think about it. As the market's trading down like this, that's what the banks are doing. They're adding more of their position in here because they've already left this area down here. They bought more, and right before the nice big run up, you're going to see this single down candle right in between the 62 and the 79% tradesman level. But no one else is looking at a fib like this. They're not even pulling it up like this because it's mathematically derived, and the algorithm will see the range here and here because of time. What's this time over here? What is this? Right here. That's late in the day. That's late in the day. That's 1800 or so on the 7th of March. Over here, all of this manipulation, this aggressive manipulation, you watched me buy this live also, and you saw me get 100 pips or so out of that move. This movement back here comes right back to the range low. Yes, there's some static around it, but we're sticking primarily with a specific price level relative to the range. Now, this one's a hard one. Okay, I'm going to be real fair with you and tell you this was a hard one to maybe see if you watched it live. The next one I show in $CAD, and couple that with what I shared on the Eurodollar example in a live entry execution for Friday, past week, yesterday at the time of this recording, on the 15th of March 2019, that is real easy to see. But you can still see that the elements are still here in the trade idea. Because what you're doing is you're waiting for price to have a very, very, very shallow retracement. It's not doing this real deep retracement because there's nothing over here to retrace back to. It doesn't need to come down to here. It doesn't need to come down to here. It's already done its work. So people are already stopped out or they're caught short. So Artemis is a macro that the algorithm will operate under and use the dealing range that we can see. We can bridge the gap from what the algorithm is doing relative to what price has already done, and then incorporate time and price. Well, that's what you get here. If we go into a 15-minute time frame, this little area right here is the London Open. So this is London Open on March 13th, and we have that down move in here, and it hits the sweet spot. To be honest with you, I can see this range as it's happening. I'm not mapping all this stuff out. I've just done it so many times I can see it. When price enters this area here, that's where I go into market. Now, everyone else is going to say, oh, he's chasing price. No, 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 no. Study it. You'll see. Because I'm already targeting a liquidity pool above some old high or equal highs or something like that. There's that high. Let me go back. I want you to see. That's this old daily high here. Okay. That level is this level. Okay. And we drop down to a 15-minute time frame. You can see how the Fibonacci target 1 level that I gave you guys, how to set your Fibonacci up, it overlaps exactly on that level. Yes, we get a little bit of a move beyond that. Who cares? If you're aiming for this and you're getting in down here, that's nothing wrong with that. It's sizable. That's a one shot, one kill, all in one day. So that's Artemis. If we go to $CAD, we can see this market structure here. Now, before I show it to you, study the price action, and you try to determine where the price range is. Don't be upset if you don't get it, because you're just now being introduced to this. But if you start going back and look at old examples in price action, you'll see it's there a lot. Okay, here's what we have. We have the dealing range high here and the dealing range low here. Multiple attempts to touch it here, found some support here. They hit it here. Lots of consolidation between the range low, range high, using the bodies. Equilibrium, the top of the bodies here, the wicks, the low on that wick. A lot of price action in here around that level. So this whole area is consolidation. I like this whole range here. Also closes in the gap there. So this is all balanced. This is the range I'm looking at. Okay, I get a lot of questions about, what's the range you're talking about? There's all kinds of ranges. All kinds of ranges. This is, again, just one, Artemis. It uses a previous dealing range, and then you look for the manipulation. Now, you may not see this as it happens. Here's the thing. This is the benefit of it. You're not always going to see a big run like this and say, okay, this is a stop run. I'm going to buy it down here. Many times you'll watch it tear off, okay, and now it's back above the range low. So what do? Most of the time you're staring at it like a deer in headlights, and the whole time it's going higher and higher and higher and higher, higher until a target's reached. Or in here, you'll want to buy it. Okay, that's when it's chasing. Down here, inside that one single candle right there, okay, that's New York. That's New York open. And it's occurring below the 50% level of the range. The dealing range high is here. Dealing range low is here. Very discernible price range. Okay, we have a run down. I don't see this happening, and then all of a sudden I look at it here. Oh, well, once we enter this shaded area, that's optimal trade entry. Is it chasing price to everyone else outside the circle? Yes. In here, we're actually buying the single down closed candle here where the banks are repopulating new long orders. Everyone else is going to see this as, okay, this is a turning point. Maybe this is an area of supply. Hello. And they want to sell short there. Okay. Or maybe they have looked at this and say, okay, maybe this is an imbalance and they want to sell it short there because they don't know what they're talking about. This is what you're seeing. You're seeing the inside track of institutional order flow, but you have to have a narrative around it to see it and understand how it works. Dealing range, wait for the manipulation to break down, and then come back into the range. Once it happens, measure the range low to the range high. Once it enters what would be normally seen as an optimal trade entry, 79% to 62% of the range, high and low, and it's a kill zone, and that's what this is here, New York Open. You're actually buying in a down closed candle right before we had the acceleration on the upside, and ramps up to target number 2 and buy side liquidity. Bingo. So I hope you found that insightful. I'll build on that, obviously. There's a whole lot more of these little quirky things that I've picked up over the years, studying price and blending what I know about the algorithm. All right, looking ahead, we have 2 more lessons for this month that I think will be enjoyable for you. March 20th, we'll be teaching trading big figures. And then on the 27th, I'll be covering framing New York setups. So I hope you have a pleasant weekend. I will catch up with you guys by way of Twitter online on Monday. And until then, I wish you good luck and good trading.